Good evening, everybody. This is Andy Pedraza with our start of the week session for the Forex trading room for May 5th of 2019. Welcome aboard. Our usual agenda, we will be looking at the prior week's results, our currency strength meter for the week and the past month, our fundamental announcements calendar for this coming week, a look at the charts on the daily for the major pairs, any setups we see in progress, and a few parting words. Starting with the week's results, the long-term ledger, we have not placed any trades this fiscal year. We haven't seen anything worth going into on a long-term trade, so this one is empty. Our intermediate term ledger, we are down a bit for the week, but that's only on realized trades. We still have open trades, some of them at profit. And this week, the pound pairs had a spike towards the end of the week and moved a bit more than 100 pips. So we did get taken out on one trade. The pound dollar took us out with a 150 pip loss, but we're also in the euro pound in the opposite direction. That trade is still open and carrying profit. And we did get back into the pound dollar expecting a retracement, so we got in after the movement ended, and well, it's an open trade. We're waiting to see which way the pound turns as the week begins. Again, these are longer term trades, so we might be holding on to these for a while or not. Depends on how long it takes for them to fulfill or take us out at our stop loss point. On the short-term ledger, we did have a bit of a profitable week, not a huge one, but good enough, 1.6% on the account balance. And also helped by the pound, we were in a pound Swiss trade, which went in the right direction, though we didn't catch as much of a move. It didn't move as much as the pound dollar, I should say. The pound Swiss nonetheless spiked by about 120 pips. We did have a trailing stop in place, and we took 85 pips on, well, 86.3 pips, I should say, on that move. We had a few more profitable trades and a few losers, nothing to brag about in either case. Our biggest loser for the week was 50 pips. That was our stop loss on the one trade. And we had a smattering of winners, of which the highest of the trade I just mentioned was at about the 25 pip level. 8 trades placed in all, 5 winners, 3 losers, and well, the results are as you see on your screen. So we have that little bit of an uptick for the weekend. We'll see again how this coming week turns out. Reminder, the short-term account is always cash going into the weekend, so we do close out all the trades on this account on Friday afternoon. Notes and opportunities for improvement. As always, plan your trades, trade your plan. That is what we have been following, so all our trades are based on whatever system we happen to be using, depending on the time frame. We do follow these strictly. There's really no exceptions, and well, the results are what they are. So yeah, we don't expect to have any huge winners at any point, though that is possible with the market being what it is, but we also don't expect to have any huge losers. We expect to have a gradual increase in the account balances over time. So looking at it on a weekly perspective, whether we win or lose is not the best view, but it is how we report the results. So keep that in mind every week as we report. It's not what happens one week to the next, it's what happens over time for the accounts. There will, of course, always be up weeks and down weeks. This one happens to have been an up week. And as I mentioned earlier, just on the notes for the week, the pound movement late in the week was a surprise, but we were probably hedged, so that we did take advantage of it. There was a nice Australian movement as well that we were riding, and we did take some profit on the Australian move, but a small profit as it retraced towards the end of the week. So not really sure what caused that across the board, but again, it is what it is. and you cannot know in advance what is going to happen. You can just trade your system and make sure you are taking advantage of what that system will do for you. Relative strength meter for the week and the prior 30 days. So the prior 30 days, we can see that the pound was the clear winner, followed closely by the yen and then by the U.S. dollar. Those three currencies were the main winners. Then we have the euro and the CAD, which were a little bit flat for the month. They won some, they lost some. And then you come to the Australian, the New Zealand dollar, and the metals, and of course the Swiss, which were the clear losers for the month. So a little bit of a hodgepodge there. For the week that just ended, much like the month, we have the pound as the clear winner. And again, that movement on the pound was towards the end of the week. If we remove Friday from the equation, the pound would have been a loser for the week, followed by the euro and the yen. And then we had, well, the others, you can see that they weren't the stellar. Even the dollar was very middle of the pack when you consider the week. It had a very good start of the week, and then it just backslid towards the end of the week. And we have the metals suffering extremely this last week, capping off a really bad 30 days. So we will be taking a look and seeing if any of these, of course, we're always looking for the establishment of trends, which is what we try to follow for longer term movements. So we will be seeing what happens. The yen, of course, was on vacation. It was a golden week in Japan, so there wasn't a lot of movement. And indeed, we can see that the shades, the coloring of the squares in the weekly is very light. There wasn't a lot of movement. The only place you see a lot of color is on the pound. That movement towards the end of the week was deep, deep, deep. And again, we see that 2.8%, which is the extreme, was only reached by the pound. You see the deep blue and the deep red is all on the pound moving against the other currencies. And all of that happened on Friday. So again, we'll have to see how the week turns out. I do think that whatever helped the pound is not going to be the establishment of a trend just yet. There were local elections in the UK, and the results were bad for the Tories and not as bad, but still bad for the Labour Party. So neither Tories nor Labour won any seats. Indeed, they lost seats across the board, and the only ones gaining seats were the third parties, the independents, the smaller parties did gain seats, but again, nothing significant that is going to move the needle at this point. And these local elections have nothing to do with the greater elections, the control of the actual country. So not something that I would say explains the movement, but of course we don't need to explain it. The market doesn't really go for explanations. The market is irrational at best. It's really mob psychology, and it is the sentiment. Sentiment is what will move the market. So whatever it was, whatever it happened to be, and this is Monday night quarterbacking at its best. Anybody that tries to explain why something happened in the market is usually just giving their opinion, and this is my opinion. So take that with a grain of salt. Nobody knows exactly why anything happened. We just have very educated opinions, and in some cases, very uneducated opinions. Fundamental announcements for this week. A relatively light calendar, though we do have a few important things going on. And we really don't start till Tuesday until well, some of it is really Monday. So we see that Tuesday in the wee hours, so right after midnight, so that really is Monday night for most of us, we have the Reserve Bank of Australia interest rate decision. So that will be happening at 12:30 a.m. We will be trading that one live. I'll decide between now and tomorrow evening whether that means we have an 8 p.m. Likely we will have the 8 p.m. and we'll have the additional midnight session. We have later on in the day or in the evening on Tuesday at a decent time, we're going to have the Reserve Bank of New Zealand interest rate decision that is going to be happening at 10 p.m. Very likely that means that our 8 p.m. session for Tuesday is going to be moved to a later time so that we can combine them. Then on Thursday, we have the Reserve Bank of Australia monetary policy statement. And you know that I've been expecting some activity out of the Australian for the past couple of weeks. And that's not to say it hasn't delivered, because it has. We've had movement out of the Aussie peers enough to make it worth our while, and we have taken profit on them. But I've been expecting something to kick it into overdrive, and any of these, the interest rate decision on Tuesday in the early hours, really Monday night, or the monetary policy statement on Thursday, either or, maybe both of them have the ability to cause the Australian dollar to go into overdrive. So we will be trading those live. And then on Friday, when the first Friday of the month is really early in the month, and in this case it was the 3rd, the Canadians do not release their employment numbers. So they will be released instead this Friday, May 10th. So we had the non-farm payroll on Friday the 3rd, and the Canadians in this case did not join us for those employment numbers. They will be happening this Friday the 10th. We will be trading those live as well. I actually prefer it this way. When the non-farm payroll and the Canadian employment numbers do not come out the same day, because that means we can trade them independently. When they do happen on the same day, the USD CAD, for example, is banned. I refuse to trade it because anything can happen if the employment numbers come out at the same time and they're pulling the dollar and the CAD in different directions. The last thing you want to be trading is the USD CAD. In this case, with the employment numbers out of Canada happening independent of the United States, we will certainly be trading the USD CAD as probably the best pair to be trading in these circumstances. You see the previous numbers. There really isn't any forecast that was in the calendar except for the Reserve Bank of New Zealand interest rate decision, in particular the Australian, because they've been saying that they need to move that interest rate decision, which would be a huge mover for the Australian dollar. There was no forecast when I took a snapshot of this calendar, which is telling. So there is no longer the expectation that they will remain at the same interest rate as before. Of course, some of these numbers will be filled out during the week as the different talking heads, experts, and I say experts, I'm doing air quotes here. There really aren't that many experts worth listening to. Anything can and will happen, but there will be some sort of forecast that will be a consensus. And that will be the market's expectation for whatever the announcement is, and we will take that into consideration. But for now, this is what we do have. And the 4 that are indicated by the blue arrows will be the ones that will be trading live. And with that, we move into our charts. We start with oil. Oil has finally broken the trend line in a bearish fashion. I had been saying for quite a while that it was moving in my expected direction. In fact, it breached my target of the 64.25 by a couple of dollars before collapsing. It's now broken the trend line bearish. I still think it will have the opportunity to continue heading up, but it was overdue for a corrective retracement. So it is going to be testing prior levels of support before heading back up. That's not a prediction. This is simply what I think is the likelier scenario. It could, of course, go all the way to the bottom. For now, it is doing that bit of a retracement, the correction. It may have ended. We can see that the Thursday candle was the bottom of the current movement, and it is trading slightly higher than that. We'll see how this week begins, see if it starts heading back towards the top or not. Of course, the Canadian dollar is tightly correlated with oil, even though we haven't seen that correlation actually pan out in the past couple of months. So no telling how this is going to play out for the CAD. We're not trading oil directly, but the CAD did weaken last week significantly, and we can blame most, if not all of that, on dropping oil price. And again, we'll have to see if this has actually ended and it starts heading back up, or if this is the beginning of a larger correction. With that, we move on to the currency charts. The euro dollar continues to move in a descending channel, and we are short on the euro dollar. We're carrying a small amount of negative right now. It actually recovered for us very nicely after the middle of the week. The beginning of the week started with the euro dollar moving against us, and then towards the middle of the week, it started coming back down. At some point, it was within a stone's throw of a break even, before ending Friday a little bit more against us. But again, Friday is usually an atypical day to be looking at the movement. There's usually a retracement on Fridays as people get out of the market. Regardless, the longer term movement is bearish, and we recently had a lower low. Just the week before last, we had it make a significantly lower low than what it's done in more than a year, and we'll have to just wait and see if this one continues heading down. It doesn't matter if it does it in fits and starts, so long as the general movement continues heading downward in the direction of our trade. The pound dollar, and here we can start seeing what I was referring to earlier. We can see that incredible spike that it did on that last candle in the chart. Of course, that is Friday's candle. Completely unexpected, came out of left field. I'm sure it caught everybody by surprise. We were in a pound dollar short, and it did take us out at the 150 pip stop loss, which is where we had it. So, and it kept going, so it's even higher. It has broken out of the top of the Ichimoku cloud, so we have a bullish movement right now. It's definitely signaling bullish, but the pound is driven by fundamentals right now, and of course by market sentiment. I don't think this is the beginning of a long-term bullish movement. Excuse me if I don't. I may, of course, be completely wrong, but I think this one will be correcting downward before too long. USD JPY, a relatively flat week. Any movement we see there is really out of the dollar and not out of the yen. The Japanese had their yearly vacation. They take a week off. This one was a bit longer than usual because they also had the coronation of a new emperor and the beginning of a new era. Japan measures its history by who is sitting on the throne. So this week we had the beginning of a new Japanese era. And the market took off in Japan. By took off, I don't mean it started running in one direction. I mean it took the week off. There was no trading, no commerce, no finance, no nothing in Japan. Everybody was on holiday, except for the people doing the emperor's coronation and filming that for posterity. So I didn't expect any movement out of the yen. Indeed, I did not trade the yen last week. So any movement you see here is more from the dollar, but even so, we can see that it was reasonably sideways. There was no major movement. Now, I am wondering if the yen will make up for lost time as the week kicks off and maybe go into overdrive in one direction or another. So we will be keeping a close eye on the yen for opportunities as the week begins. We may see that the Japanese jump back into the market, both legs first, without testing the temperature of the water, making some of these yen pairs move significantly. That's not a given, but we will be looking out for that. USD CAD, there's not much I can say about the CAD that I haven't said. It's not been reacting properly with the oil price. So the correlation seems to be a little bit broken right now. But in general, this is a bullish pair. It is heading towards the top, which is abnormal. With everything in the fundamentals, it should be heading lower, but it hasn't. So we're trading it whichever direction it happens to be going at any given time. I'm not going into any longer term trades on the CAD, except on a few pairs where I think the likelihood is more in our favor. I wouldn't mind, for example, shorting the Aussie CAD, but the USD CAD is definitely not going to be my cup of tea until I see a little bit of rationality return to the USD CAD. Not that the market is rational, but I don't expect it to be too irrational either. USD Swiss, we've taken some brilliant profit out of the USD Swiss. It looks like it is starting to at least consider a correction towards the bottom, which of course is something I've been looking forward to for quite a while and simply hasn't panned out. The last time we had a nice visit towards the bottom of its range was in September of last year, as we can see at the extreme left of the chart. I'm still waiting for it to do a test of those lows, and just hasn't been cooperating. It's been trending higher and higher, and in fact, very recently, we had it make the highest high it's had in a couple of years. So I'm still waiting for that downward correction. But in the meantime, I have been trading it up. So we've made some significant profit out of, or taken some significant profit out of the Swiss pairs in the past few weeks. And we'll see if there's more opportunities coming to us out of these pairs in either direction. For now, on the USD Swiss, my opinion, it's very overextended towards the top. As I said, it just made a new major high, breaking out of the prior level of resistance that we can see there on the chart right below it at the 101.25. That area of resistance held for a really long time, hasn't been broken by much. So we'll see if there is much like the oil chart that we were looking at the beginning, it may have moved too quickly, and it must now do a test of the lower levels of support. And if it does, there is a nice opportunity there for us, not just on the USD Swiss, but on multiple Swiss pairs. So we'll be keeping an eye on that as well. Very likely both for short-term and longer-term opportunities. Aussie dollar, and as I mentioned, we had some nice downward movement out of the Aussie dollar last week, and indeed out of most of the Aussie pairs, which also failed and started going back on Friday. So we took profit on the Aussie pairs, but not as much as we were carrying at one point, thanks to Friday's retracement, which was much stronger than the usual Friday retracement. So, and did catch us a little bit by surprise. It happened early in the early hours, and not as usual as usually happens, which is around the afternoon of Friday. So again, we took profit, but not as much as we could have taken. But these things happen. There is no way to precisely time the highs and lows of any market, not just this specific currency, but any market, and indeed that applies to stocks, options, everything. So we do as best we can, and we follow a system that is what keeps us safe and hopefully keeps us at profit. The Kiwi dollar, much the same, a nicely bearish week that suddenly turned around on Friday with a vengeance. We were also in the Kiwi dollar, and we did take we had gotten in later in the game onto the Kiwi dollar, so we did take a small loss on the short term, and I do mean very small, as we manually exited this trade at the end of Friday. And we'll probably be back in. It was a nice bearish movement, much nicer movement than the Aussie dollar. Bearish movement that began back in early March, and I do not think it's been tapped out yet. And I'm expecting it to do a test of the very bottom at the 64.20s, and we'll see if that actually pans out. That would be another about 200 pips from where it is right now. So I'm keeping an eye on it, but again, we're going to be trading it as safely as we can, and not allowing too much risk to creep into the account. On the plus side, this one has not broken any trend lines as yet. It is still following a nicely bearish trend line down. So again, we'll see what the future brings. Aussie CAD, this is another one of those Canadian pairs that I would definitely trade. Probably the main one I would trade. So I am waiting for it to consistently or definitively rather break that level of support at the 94.15, that red horizontal we see right below the latest candle, and it did break it momentarily on Friday before popping back up. I need a definitive break, which means that I want the candle that both opens and closes on the other side of that line for me to take that trade, and I will take the trade once that happens. In fact, I already have a pending order to short this pair at a price point below that line. And again, I'll be trying to ride that one down all the way to the bottom at the 91 level, which is about 300 pips. And of course, there's no guarantee that that will actually pan out, but the likelihood of the Canadian regaining some strength, plus the weakness we've already seen in the Aussie, makes this a very likely candidate for such a movement. Euro Swiss, this was another of those trades we exited late Friday at a small loss. I think this was the only other one that we had two trades open at the end, Kiwi dollar and Euro Swiss, that were carrying a negative, a very small negative, and I did exit. We are, well, the Swiss, as I mentioned, has been overextended, but this one looked at the beginning of the week as if it was trying to make another attempt towards climbing the summit here and hitting that 115 line all the way at the top. But the movement failed on Wednesday. On Wednesday, we can see that it started failing, and it did start going back towards the bottom. It still ended the week above where it had ended, but obviously it didn't go all the way to the top. So this was meant to be a short-term trade. It's still in a bullish breakout, but come Friday afternoon, I did close it and took a small loss. We'll see if we want to jump back into it as the new week begins. Depends on how it begins, of course. Euro pound, this one was our second winning. Actually, we haven't covered the pound Swiss yet. So this one was our first big winner. We do have that trade open still, however. So we are still in this Euro pound trade. It's been protected to some degree in that we do have a trailing stop in place to protect us against a retracement, which does not protect us during the weekend since the market is closed. If it gapped, and I haven't checked the market yet, there is the possibility that we got taken out at a lesser level of profit than we had been expecting. But again, the market is the currency we pay in order to be in the market is risk. If we're not willing to risk some of our account, then we're not going to be taking any profit. So the keeping this trade open over the weekend was a calculated risk, and we'll see how that pans out. But it was carrying close to 100 pips of profit as we closed out, or as the market closed out on Friday. So trade remained open. We can see that that candle on Friday ended very much near the bottom of the movement. It was only a very slight retracement at the end of the day. And of course, we'll be seeing if it continues moving in that direction. If it doesn't, as I said, we have a trailing stop that will take us out, but we also have the pound dollar trading in the opposite direction. So as one trade takes us out at profit, the other trade, assuming the market moves with deliberation, will carry even more profit as the pound pairs move back to where they were towards the beginning of last week. So nothing has happened yet, but we'll be keeping a close eye for more opportunities to squeeze some profit out of the pound pairs. Euro JPY, not going to dwell on this one. Again, Japan was on vacation for the last 10 days. So today is actually the first work day in Japan, because it is Monday morning now in Japan. Today is the first work day in the last 11 days for the Japanese. So the Euro JPY didn't move much throughout the week. It went up a little bit and then went down and ended the week pretty much exactly where it had started. I will be keeping an eye on this pair, as I will all the yen pairs, for opportunities of a bang as the Japanese come back from such an extended period off. Moving on to the Euro CAD, this one has been a non-starter. It's had a very, very tight sideways movement. I'm not sure that this one is on my roster. Of course, if I do see a movement, I'll trade it, but I'm not holding my breath out for this one. This one might be one of those that we want to stay away from as regards to CAD. Aussie CAD, though, definitely on the radar, and that will be one of my focus. And my other focus will be, and we'll come to that in one of the later charts, is going to be the pound CAD. I think that one has some good opportunity as well. Pound JPY had a lot of movement during the week, but it was all from the pound. Again, Japan on vacation. So this movement towards the top and a breakout of the Ichimoku cloud was all on the back of pound strength. And most of it happened, again, as we mentioned, on Friday. On Friday, it just broke out of the cloud and ended the week pretty much near the top. No idea what's going to happen. As I said, I don't expect this to be the beginning of a trend or anything like that. And of course, I could be wrong. This could be the beginning of the longest trend in the history of trends. But we'll have to wait for that to actually happen. I don't believe it will, though this may indeed continue heading towards the top, and especially no telling which way the yen is going to jump now that the Japanese are back from their extended time off. So I'll be keeping a close eye on the pound JPY. I do expect the pound to retrace a little bit this week back towards where it had started the prior week. So I expect pound weakness to some degree. That's my expectation. That doesn't mean the market has to do it, but that will be what I'll be looking for as the week kicks off. Aussie JPY, Aussie weakness, of course, but all in all, it wasn't a significant move. And again, yen on vacation, but we do have a bearish breakout out of the Aussie JPY, and we have a lot of room towards the bottom of this chart of 400 to 500, somewhere between 400 and 500 pips of range if it goes all the way to the bottom. But as you can see, it's been in a very tight sideways movement. So unless it breaks out above the 80.65, that is the most recent high, or below the 77.50, which is the red line immediately below the current candle's activity, I probably won't be trading it. But if it does break out, then of course I'll look for a good entry and we'll start running with it. Euro New Zealand has been very choppy. It goes up, it goes down. It's becoming range bound sideways. Of course, it's too soon to tell, but it is starting to look like the beginning of a sideways movement. I tried trading this one back up at some point. I think we got out with a small loss or a small profit, I forget which, as the movement crested on Thursday and then started heading backwards. So the previous high was not broken, which now puts in question whether that bullish movement is going to continue or whether we're going to have an opportunity to trade it back towards the bottom of its most recent range. I'll take either one. So I'll wait for the market to actually do whatever it's trying to do, break out of that sideways action, and then I'll place our trades accordingly. Pound CAD, and I mentioned this one, that breakout last week, phenomenal. So this was pound strength and CAD weakness playing out at the same time. We didn't catch this one. You can't catch all of them. And I was especially not expecting significant movement out of the pound. But it is now getting to the very top of the chart, and I don't think it's going to have the strength or the wherewithal to actually break above the 178, which is that line at the very top. It may go and test it, or it may start dropping immediately. So this is another of the CAD pairs that I would be very happy to trade towards the bottom. Very unlikely that I would trade it up, but if I see a retracement towards the bottom happening, I'm going to jump in with as much equity at risk as I feel comfortable with and see how far this one retraces. And last but not least, the pound Swiss, which gave us a very decent profit on Friday before it did retrace. It took us out on the automatic on our trailing stop, so it had to have retraced at least 25 pips, and we do see that longer wick on this one. This is another one that's very, very close to the top of its range, and I do not know if it's going to have the strength to go above that. Of course, it can go anywhere it wants, but from a technical perspective, as well as from the fundamentals, this bullish move may have been tapped out, in which case we'll be looking for opportunities to start riding this pair back towards the bottom. But again, we'll wait for it to happen. We're not just going to assume that it will because it's near the top or some such nonsense. That's how you lose money. So we will be trading price action. Ultimately, all systems, if you whittle all the decorations off of them, it comes back to a simple rule: buy when things are going up and sell when they're going down. So I'll be waiting for the sell when they're going down part of that equation. And that's the end of our daily charts for the review of this week. The setups I see in progress for the week, of course, and I've mentioned this multiple times, while we were looking at the charts, we had a huge strength play from the pound late last week. It's worth watching for a reversal. That is the higher likelihood. Doesn't mean it's going to happen, or even that it's going to happen this week. But I do think there's a higher likelihood of the pound giving up some strength after that massive movement last week rather than it continuing up. However, with Brexit having been pushed off potentially until October, and it's looking very unlikely that Prime Minister Theresa May will manage to exit the country before the May 23rd elections, the European elections. Very unlikely. Sorry about that. Very unlikely. So I think the UK is going to be stuck, not necessarily until October, but certainly for more than May. No pun intended there. So the market may indeed not react and not reverse the pound, since the sentiment is that there is a lot of time left between now and October. But I do think that last week was just too much and for no good reason. So we will probably have a reversal of fortunes there this week. The European pairs, they are not showing much directionality, and that probably won't last long. I'm not even going to hazard a guess as to which way they're going to jump, whether up or down, but we'll be looking for those breakouts and trading them accordingly. The Canadian pairs, the Canadian dollar is still very shaky, and we now have that significant oil price retracement to contend with. So we'll see how they start out the week. I will likely wait 24 hours, and whatever direction the Canadian dollar takes in those first 24 hours of the market is the direction I will be trading it through Tuesday, Wednesday, Thursday, then looking to exit on Thursday before the Canadian employment numbers come out, and of course before Friday's retracements commence. Japanese pairs, I also mentioned this quite a few times. Golden Week is over. A new emperor sits on the chrysanthemum throne. Congratulations to Emperor Haruhito. And the yen may try to make up for lost time as the week begins. Doesn't have to, but very good likelihood. So we'll be keeping an eye on that. And last but not least, the Australian dollar. It did weaken significantly throughout the week, and only retraced back into Aussie strength on Friday, which did take us out, as I said, at profit, but not as much profit as we had been carrying through Thursday. The New Zealand dollar did much the same. So we had that zigzag, and now we're waiting to see if it's going to zig back into weakness again. So keeping an eye on those pairs, and that is what I see as our opportunities for the week. We'll be keeping a close eye on them and acting accordingly. And a few parting words here. Reality, we always want to trade reality. We may have our specific ideas, our hopes or biases, and we may even be very sure of them at times. I'm usually very sure of myself. I have that. That's both a blessing and and a problem there, because I'm often very sure of myself. And this is why I always trade a system and I don't trade my ideas, my hopes, or my biases, because even though I am very sure of myself, I am also often wrong. Since I don't bring my ideas, hopes, and biases into the market, it doesn't matter whether I'm right or wrong. I'm trading a system. So successful traders, and I hope this is, well, for one, I hope this is me, but more than that, I hope this is going to be you guys as well. We trade whatever the market is doing, not what we think it should be doing. And this applies to life in general as well, not just trading, but of course, I'm not trying to be your psychologist here, assuming you even need one. But in life, try to make sure that regardless of what you think, you're actually reacting to what is happening out there, not what's happening in your head. So ask yourself always that question: are you operating based on reality, or are you operating based on what's happening inside your head? And if the latter is true, then try to correct that, because that never ends well, not in the market and not in real life. And with that, we reach the end of our session. And of course, as always, if anybody has any comments or questions, do feel free to jump in at this point and let me know. Okay, if not, then I wish you a very pleasant evening, and we'll be back tomorrow for our first trading session at 8 p.m., very likely at 8 p.m. As I said, we have a midnight fundamental from the Australians. So that will be happening at midnight plus half an hour. So technically it will be Tuesday morning, but very likely it being the first trading session of the week, we will have our normal 8 p.m. and then we'll have a special session to trade the Australian decision coming out. So thank you very much. It's been a pleasure to start this week out with you guys, and I'll be talking to you throughout the week. Have a great one.